Cody, welcome back to the show.
Thanks for having me, Chris. Good to see you.
We have a big day tomorrow. Your Texas Tech Red Raiders are playing the TCU Horned Frogs. This is being recorded on Friday. We'll be releasing it on Tuesday. You have any predictions about what's going to happen?
It's a huge day. We're planning on ruining your season. That's the goal, at least. No, I don't know. I don't know what's going to happen. I think it's been a good game. It'll be exciting. A lot of energy in the stadium.
Yeah. Wish
it wasn't at 11 a.m.
Yeah.
But it'll be good. People will be fired up.
And you've got a secret tailgate thing going on?
No, it's not a secret at all.
Okay.
It's going to be a big tailgate. It'll be fun.
Okay.
It's TCU and Texas Tech tailgate.
Okay.
There will be a lot of people there, though.
All right.
Come see us.
I'm going to come see you in the morning. All right. When we were here last was November of 2021. No, November of 2020. Oil was at $42, $40, and y'all had not sold yet to Pioneer. So maybe let's just start with kind of what happened from November going forward, and I really want to get into the sale to Pioneer.
Yeah. So that company was Double Eagle 3. It was the third company, private equity-backed company we had built. The prior company, Double Eagle 2, we had sold to Parsley Energy in 2017. And, the strategy had shifted a little bit, although we were in the same basin, we were doing essentially the same thing. Our core competency really is assembling acreage. It's buying little bits and pieces, putting them together, making them horizontally drillable. And so that's the strategy we started out with, and that's what we pursued. And we did a good job of putting the acreage position together in Double Eagle 3. We got about 100,000 acres. The shift, however, was that because the market demanded it, because A&D market demanded it, we needed to establish more production than we did in Double Eagle 3. So, and this is just because the market could no longer buy things on a price per acre basis. People want to know what the price per acre is, but the most important thing became, how does your EBITDA multiple compare to our EBITDA multiple as a buyer? What the market's given us, and is it accretive? Is your cash flow multiple accretive? Are you accretive to our net asset value from a net present value standpoint? So it was very important that we establish production to support the value of our acreage, essentially. And so we started running, we got up to 7 rigs. And when we sold, we were just under 100,000 barrels a day of production, which is a lot of production. I mean, there are OPEC member nations that don't have much more than that. So, we're really proud of the fact that we got to that point.
Yep.
But, that operational aspect of it brought a lot of new challenges and, interesting things that happened. But I think the biggest challenge we faced was what many companies faced, many industries faced, was during that COVID disaster. And, pretty close to right after we talked, oil, went to zero, and then it went to negative for a while. And people honestly thought it was never going to come back. And so a lot of companies, every company, oil and gas company, had the conversation of, do we keep drilling? Most, I would say, made the decision to really slow down or even stop, lay down all their rigs, and we debated it heavily. And we were all in a time of great stress also just in our personal lives because nobody knew what was going on in the world. Like, is the food supply going to be disrupted? Or, are we going to get COVID and die? Or one of our kids going to get sick or whatever? And so it was a scary time. And during all that, we had to make good decisions. And so we all got together and, the Double Eagle team is kind of a family and we're all very close. And so, we made the choice early on that we're going to all get together in person and we're going to be in the office. A lot of the employees the majority of the employees work from home, but John and I and Josh Gregg and Blake Carpenter and Garrett Martin, we were at the office every day. And so we were able to sit down in person and really talk through this stuff. And the decision we made through all that was to keep going, to stay the course. We had set up our balance sheet conservatively so we could weather a downturn, because we knew that a downturn would come at one point or another. We didn't know it was going to come as a result of a pandemic, but we said, look, this is a really weird time, but we were prepared for this. We have a great hedge book that's protecting our revenue. We're low leverage. We can weather this storm, and so we're going to keep on drilling. And because we made that choice, we had this really good asset, but because we made that choice and we were able to keep production growing, we were able to sell, last in May of the following year. And if we hadn't, we wouldn't have been in a position from a cash flow standpoint to get the price that we got.
Why did the industry, we'll get to that in a second, but why did the industry move Well, first off, what was the industry doing when it was valuing things on a price per acre? What did that actually mean? And then why did they decide we shouldn't be doing that anymore? We have to get to EBITDA.
Well, I think that what people thought, and they were right to a degree, is that in these resource plays, the acreage is essentially homogeneous. Now, it's not all homogeneous, but there are very large areas that are the same. And so if you have a certain number of net acres, you're going to be able to drill a certain number of wells, and it's going to, the 250th well is going to work as well as the third well worked, and it's going to be easy, and you're going to be able to just roll it out in manufacturing mode, drill these wells, no problems at all. But what we figured out as we tried to work through it is that as you scale things, a lot of problems come up and difficulties happen, cost overruns, you run into infrastructure issues and things like that. And so a lot of companies stubbed their toe, missed earnings, disappointed the market relative to what they thought that this was going to be easy and homogeneous. Well, it wasn't. And so the market really made people rein it back in. And so the market became very focused on, all right, we know you have this much acreage, but how many drillable locations do you have?
Yeah.
And then beyond that, they wanted to see the proof in the pudding. They wanted to see you, hit your revenue projections and your costs and everything else. And they wanted to know, how many days it was taking you to drill a well. So the operational aspect of it and the actual dollars and cents part of it came to the forefront.
Yep.
So investors got smarter about how shale plays work, and I think more rational. And so they just forced a little bit more discipline. Instead of just having a resource, you have to have a business. And in order to sell, you can't just have a resource. You can't just have assets. You have to have a business that you can sell. And so that's what we focused on in Double Eagle 3, and that's what we were able to build.
When you're on y'all's website, it says something like y'all are a land-based oil and gas company or land-focused. And then I wrote down bits and pieces. We put bits and pieces together. What are y'all doing? What does that mean? And then why are y'all able to do it at such a scale and really at a level that nobody can really keep up with?
Well, I don't think we're doing anything that's super secret or complex or anything. Right. We just get in there and are not afraid to take on difficult situations. We're not afraid to dig into the weeds. We're not afraid to go buy a 10-acre parcel, not exactly knowing what we're going to do with it, just knowing that we will build something around it and do something with it eventually. We have that enough confidence in what we do that we're willing to take risk on pieces that you don't exactly know how they fit in when you buy them. But then also over time, we've just built an understanding of the land situation across the basin. We know how all the pieces fit together, and we kind of know how to put them together. But we'll take on things that have very difficult title situations associated with them. And unless you're a landman in the oil and gas business, you may not understand how deep the complexity can truly be. But there can be thousands of owners in a tract, different owners by depth, different owners by royalty. Executive rights can be different than the actual mineral rights. I mean, it can be insanely complex. And being able to piece all those things together is really critical, especially in a horizontal world where you have to have 1.5 to 3 mile lanes that are ready to drill that are uninterrupted. And in Texas, we don't have forced pooling like they have in other states. So you actually have to work out commercial deals with each owner that owns each foot of that horizontal. And in some cases, it can be, again, thousands of owners. But we are set up to do that. We're organized to do that. We have systems now in place that we've developed over the history of our company where we know how to pursue things like that and get them put together. And so that really has become the key. And now in Double Eagle 4, we just know it so well, and we have our program down so much that it's almost, just second nature to us, and it's much easier than it was a few years ago.
So the bits and pieces are putting together those drill lanes, basically.
Where
one doesn't exist, y'all can see something that maybe others. If I was entering the industry tomorrow, I'd look at it and say, how in the world would you put this together? And y'all see a pathway to put it together.
Right. I mean, you can see the blank space on the map, but you go in there and you're like, God, I mean, there are all these owners and these impossible people to deal with, and you can never put it together. And some of them probably never will get put together, but we'll find an angle, we'll get in there and in a lane and figure it out and get it put together. And, and we're not afraid to buy a piece that has a title encumbrance or is, maybe subject to a lawsuit or something like that. I mean, we'll go in there and take those types of things on, and sometimes it works and sometimes it doesn't, but more often than not, over time, we get them figured out and make them drillable.
Is it fair to say there's been kind of two different types of oil business emerge throughout the shale revolution? Some that maybe fit more like what y'all think, how y'all think about it, versus the people that are just pure, can we get oil out of the ground? The people maybe you're selling to?
I think the entire industry has gotten pretty smart. All the shale players now are accustomed to doing these acreage swaps, which are critical to getting your lanes put together. They're accustomed to dealing with title issues. The bigger companies were slower to get to the game, and that gave us a lot of opportunity at the beginning. But now everybody kind of gets it, you know. And so now it's just a scramble for getting the remaining pieces put together.
Yeah.
And so every day is hard and competitive, and there are great competitors out in the basin, great companies out there. And so we just do our best to try to get it done and not pay too much for it.
All right. So y'all made the decision during COVID after a lot of discussion to kind of keep drilling, which obviously proved to be the correct one. Was there ever a moment in those conversations where you thought about laying it down? Like, was there a turning point, or was it pretty crystal clear? Like, our goal is to keep going, and we're just making sure that we've thought of every reason why we can keep going.
I think John and I believe that keep continuing operations was the right thing to do from the beginning, but there were different versions of that. At one point, it was like, we're going to keep drilling. We're going to build drilled uncompleted wells and maybe complete them later. There's even talk about shutting in our existing production and just keeping it in the ground. But went through the process, thought through all the different angles, and came up with just, we got to keep going.
Yeah. And
we can keep going. Like, again, we didn't know it was going to come from a pandemic, but we knew a downturn was going to happen at some point, and we were prepared for this. Yeah. So, we have the balance sheet for it. We have the hedge book for it. So let's keep moving, keep going. And, that's what we did.
All right. So at what point, so that was November that we talked. I think y'all completed the sale in May or June, which would have been 6 or 7 months later.
Yeah.
All right. So November comes, we have our podcast. I think Thanksgiving was right around the corner. When did it start becoming clear that you were about to either sell the Pioneer or sell in general?
Well, we really sort of built the company to own forever. And I think Hollis Sullivan, who's a friend of ours, has told us very well that, you want to build a company that you want to own forever. And that's how you want to always think about it. So that's what we did. And so we knew, though, that in all likelihood, we would sell eventually. So there were a number of companies that we stayed in touch with throughout the growth and evolution of our company. Kept them updated on what we were doing, how many acres we had, how many rigs we were running, our production projections, all those types of things. So there were several companies that were familiar with our asset. And there was, with the size that we became, there was a logical set of buyers. Not everybody could come up with $6 billion. So we talked to those folks, and then it just, as the market kind of reawoke, I guess, when things kind of bounced back, everybody realized, okay, the world's not going to end. There obviously became some interest in companies to be acquisitive. And so we started hearing from a few, and actually received 3 or 4 different offers that were not really even solicited. One of them was from Pioneer. And, for them, it of all the companies that could have bought us, they made the most sense just from an industrial logic standpoint. Our assets were contiguous in many areas. We're exactly in the same spots. Our infrastructure systems fit together. Our operation systems fit together. And a lot of times we extended their lanes. There are just a lot of efficiencies. And so to them, our asset had more value than it did to anyone else. So they really were the logical buyer. The question is just, are they willing to pay? And, they were trading at good multiples. They're strong, very conservatively run company. They had the financial ability to do it. And so they came to us and just sat down with us, and, and we got the deal done, and their top 3 people came in our office one day, made us an offer, and Scott Sheffield said, "Here's the offer. We're not going up another penny." And we're like, yeah, right. So of course we went back and countered to him, and he said, "No, I'm not going up another penny," and he meant it. And so, so we did the deal, and I think it was a really good deal for us. With the value we had in it, we were able to make a great multiple, and for them, it was extremely accretive. Their stock price has gone up tremendously since the deal, not just because of our deal, but it's been a good thing operationally for them. From an asset standpoint, it's been great. And so, it's always good when a deal works out for both parties and everybody's happy with it. And I think that's where it is with them, and relationship's great with them. We had a transition period and worked with them for several months, helped them, understand our asset, and helped them with some land stuff, with some operational stuff. And it was great. And we love those guys. I mean, it's fantastic.
So you kind of answered the question. When I think of a $6.4 billion negotiation, I can think, oh man, it's got to take forever. This happened in a relatively short period of time.
Yeah, it was a very compressed time frame. There were some different, and I can't remember exactly what they were, but some different reporting periods and things that were going on with them. We needed to get it done before a certain date if we were going to do it. And so we agreed on the deal, and then it was a mad rush to get the documents put together and deal that size. And we took $1 billion in cash. The rest was in stock. So taking stock like that, there's a lot of, SEC type stuff you have to do and regulatory things you have to go through. And so there was a lot of work that went into getting all that done. I mean, very late nights, up to the office 3 or 4 in the morning and back at 7. And, and that was for, a couple of weeks. And their team did the exact same thing. They worked extremely hard to get it done, which we really appreciated. And again, they're very top guys are plugged into it, and they're super smart. And so, and very commercial. And so we were able to work through all the tough issues, and there are a few things that it came down to, and we got them figured out and done. And, the rest is history.
In a deal like that, whether it's your deal or just any deal like that, what blows up a deal like that you don't own what you think you're going to own? Or because once you kind of say this is what we got, they probably already know the geology. Like, what could blow a deal like that up?
Man, it could be anything.
Yeah.
Small things, big things. When you're talking about stock, it could be how restricted they want to have the stock be.
Okay.
When you can sell it, when you can't. It can be any number of things. It can be an asset level thing. The good thing about our asset is that we are so focused on the land side, and we knew what it took to have a marketable asset, that our land is pretty clean.
Yep.
And so, that was never going to be a problem. Our operations were clean. We have a great operations staff that, we have been a part of our team for a long time. So things were good there. It was really just deal term type stuff.
All right. So you make the sale. That's in May or April of 2022. You take a year off, and then you've just raised $2 billion more. Is pretty much rinse and repeat. Do it again.
Yeah. So we had an 11-month non-compete. We closed May the 4th. So that non-compete burned off in April. And so over that year, we thought a lot about what we're going to do next and how we're going to do it. For a while, we thought about not working with private equity. We didn't know really the scale of the opportunity that was going to be there. And so if it was going to be relatively small, we thought about doing it with just our own money. We thought about doing it with just our own money plus some friends and family or some family offices, things like that. But as we moved forward and looked at things and thought about things, we saw that there could be a bigger opportunity. We had a relationship with NCAP in Houston. Gary Peterson is one of the founding partners there. He's a big Texas Tech guy, known him forever, great guy. John and I had a lunch with him just about Texas Tech stuff. He said, "What are you guys doing?" "Well, we're thinking about this and that." And he said, "Well, we ought to do a deal. We've been wanting to do a deal forever." And John and I said, "Well, here are the terms that we need." And he said, "All right, done. You want me to write you a check right now?" And so we did the deal with them, and brought in a lot of our older investors that have been with us a long time are still in with us. Apollo is still in with us, and they're just not leading the deal this time. And so, pulled all that together and got it done and hit the ground running in April. And we've already gotten a lot more acreage than I expected we would get at this point. We're running 2 rigs right now. We're going to add 2 more in the first quarter. So, things are going well.
That's awesome. Well, I'm sure if we do this podcast and again in a year or two, maybe we'll have something else to talk about. Who knows?
I hope so.
But you are building a company for a lifetime. So maybe not. Maybe we'll have to wait. All right. Oil's at, I think it was at 92 this morning when I checked. Gas was at like 650. So now let's kind of just move the conversation to just energy and how you see the energy markets today.
Mm-hmm.
What we've learned about what the financial markets want to see, but we're also seeing what politicians want to see, global leaders want to see. So let's kind of dive into the current state of the energy markets. Maybe why we're at 95 and the big things driving what you see in today's environment. Well,
right now we really have an energy supply crisis globally, especially in certain geographies. Like Europe is energy starved pretty bad, and they're in for some tough times moving forward. But the reason we're in this position is because there's just been vast underinvestment in the industry in the last several years. You have to continue developing, exploring, finding new oil and producing new oil in order to supply the global need. The sort of general thinking or assumption from a lot of people is that the need for oil is going away. They think, well, we're all going to go to use electric vehicles and we're going to electrify the economy globally. So we're not going to need so much oil. So that's a dying industry. So I don't want to invest in that. There's also been pressure from ESG, certain pensions, a lot of them, especially in Europe and the coasts here in this country, cannot invest in oil and gas or don't want to. And so that's taken a ton of money out of the system. So 2018, somewhere in there were $90 billion in private equity available to the industry. Now there's about 30. Similar things are happening in commercial banking. The size and scale of commitments that banks are willing to make to oil and gas have gone way down. In many cases, especially a lot of the European banks are completely out of the business. So you just can't get the capital that you once were able to get. And also the public companies, like I talked about earlier, have been forced to be much more disciplined. So they're not ramping rigs during times of higher prices. They're staying, they're paying big dividends. They're buying stock back, those types of things. And so you're just not seeing the growth in production that we had in the past. Plus, the big international projects are not happening. Like the big majors, which do those projects, they're investing in, renewable natural gas and solar farms and all that kind of stuff. They're not investing the big billions of dollars in these offshore African projects or whatever, where huge amounts of production come from. So we don't have enough of it. And the reality is that, current projections show oil demand continuing to grow through 2050. Meanwhile, the base production is continuing to decline as it naturally does. So we just have a huge supply gap. So who's going to fill that? And right now, I don't know. The problem we have is, again, this just broad perception that it's going away. And so people don't want to invest in it. That's wrong, but that's the perception. Secondly, we have all this political rhetoric, which is extremely damaging. It's like we got one foot on the gas and one foot on the brakes. Our administration currently is the best example of that. Biden last week comes out and says, oil companies need to increase their production. If they don't, we're going to tax you. Well, that doesn't help, right? Because people are worried, well, how much do they need to produce? Are you going to tax them? If you're going to tax them, that might hurt my investment. So I don't want to invest in that. What are you going to do to them? And so the rhetoric is just very non-helpful. And if we are going to prevent ourselves from being in a huge bind, that's got to stop. People have got to say, we want all the energy we can get, and we want as much of it as we can get from this country, because that's what makes us the strongest and the most safe. But we're not willing to say that yet. What I'm afraid is that, we've already seen quite a bit of pain. We've seen pain at the pump. We've seen pain in electric cost. We're going to see, disruptions in power supply this winter probably. So we're already seeing some pain, but I'm afraid that in order for people to come to the realization that we really need this stuff, there's going to have to be a lot of pain ahead. And I actually believe that global warming, climate change is a concern. Like, I think we need to be aware of the amount of carbon that's in the atmosphere. But I think that we have to be realistic about it and have to recognize that if we're going to have a transition eventually, it has to be a sustainable transition. Now, it has to be environmentally sustainable. And that's when you talk about the word sustainable, that's what people usually think about. But it also has to be economically sustainable. And if we go headlong in the renewables too quickly, when the technology is not there, the infrastructure is not there, all we're going to do is make it to where people are going to abandon it or want to abandon it because everything's going to get too expensive and there's not going to be enough energy. And that's what we're seeing right now. We've gone too fast. So there has to be a transition. It has to be a true transition. And that comes with a lot of natural gas. It comes with trying to get, developing countries away from burning like biomass and dung and those types of things, which they're doing right now, which are much more carbon intensive and dirty. We got to get them using natural gas. We need to have a lot more nuclear power. We need to have an all of the above approach, because developing economies want to increase their quality of life. They want to increase their lifespans. They need energy to do that. There's a huge gap in what is wanted and what we actually have. And so we're setting ourselves up for a huge problem. Right now, what we're seeing with energy prices increasing the way they have, instead of a transition into renewables, we're actually seeing a transition into coal. China is building an enormous number of coal plants right now. Germany, who took all theirs offline, took their nuclear offline and made this huge investment in wind energy, they're turning their coal plants back on right now. Well, coal is way dirtier than natural gas is. And so if we had just been smart in the last few years and we had permitted gas pipelines in this country and LNG export facilities, Europe would be in a much better position right now, because they would be burning our gas instead of having to rely on Russian gas. And everybody would be much more safer and secure. It also has to be politically sustainable, right? This is geopolitically sustainable. So we can't have imbalances and weaknesses created in the energy supply that give people like Putin opportunity to cause problems, which he's exactly done. I mean, he knew Germany and Europe, Western Europe, had become weak from an energy standpoint, and he had them. And so he took advantage of it.
Yep.
And we're going to continue to see that. We've seen when, big initiatives, green initiatives have happened in countries like Australia and France, energy prices spike, people protest, they abandon it. So if you want to have a transition, it has to be sustainable on many, many levels. In order to make it economically sustainable and politically sustainable, we have to use hydrocarbons. We have to use them. And we need to do it in a smart way. We need to do as much of it in this country as possible because we do it in a cleaner and better way than they do in other countries. We take care of the environment better. And our politicians need to support that. They need to have a realistic perspective and realistic rhetoric on it rather than telling people something that just isn't possible. And that's what we've done right now in the past few years, and it's hurting us.
Okay, so we'll break that into a couple things. Okay, the lack of capital. That comes from pretty much everything you just said. The decades-long building narrative that it's going to be gone, it's dirty, it's not good for the earth, et cetera. So we've lost capital. Is there any sign, as you see it right now, with prices high, or Europe's in turmoil, Russia's in Ukraine, lots of things going on around the world, that there's anybody that was once saying, no, we're never getting back in, saying, all right, maybe we're going to get back in, or is it still dead silent now?
We're starting to see a little bit of shift, but
Okay.
it's not significant at this point. And I think the shift is coming from people who are more practical investors. They say, hey, look, we actually see a business case for this now.
Yep.
We think prices are going to be higher because of this underinvestment, so we're going to get in. So we're seeing some of that. Some of the banks are coming back. There's now a pretty strong push back against ESG investing because a lot of the ESG funds have not performed well, but also just because they've realized it doesn't make sense. Like, that's being like the arbiters of morality and social good. That's not the role of the financial industry.
Right.
The role of the financial industry is to efficiently and properly allocate capital to the highest return projects. And individuals can make choices what they consume and what they don't consume, but the only role of the financial industry is to allocate capital to the highest and best use. And when they get into other things, that creates inefficiency. There's lower return on investment, not just from a pure return on that individual investment standpoint, but also from an overall GDP standpoint. If capital is allocated inefficiently, then our GDP suffers, our standard of living suffers. And that's what we're seeing. And so people are pushing back against it. There was a big article in the Wall Street Journal this week on that exact topic. I think people are starting to see it and understand it. So maybe the tide is turning a little bit, but we have to keep talking about it. We have to keep people reminding people of it. But honestly, unfortunately, I think it's what I said earlier is just
we're going to have to feel it.
We're going to have to feel it.
Okay, so Biden started his election or getting elected with, I'm going to end fossil fuels forever. Now, last week, he told domestic producers, you have to grow production or else we're going to tax you. Weeks before that, he was in Saudi Arabia and Venezuela. So, foot on the gas, foot on the brake. Do you think this is a last political desperation to stick to, like, I promise green, I'm going to try and stay green, but also not, like, or are we starting to see this unfold and maybe the Democratic Party starting to come back around?
Biden has a lot of smart people in his administration. I think he has a lot of people who don't really understand the energy industry. I think they bought into the narrative that this transition was going to happen very quickly and easily. And so that's the direction they went. But it also was politically convenient for them because their base really wants and believes that, we need to go net zero very quickly. And so I think he's again, one foot on the gas and one foot on the brake. He's trying to straddle the fence a little bit because they've come to realize that they need oil and gas production.
Yep.
They know that they have to. Not only does the economy need it, but they need it politically. But at the same time, they want to try to keep the promises they made and keep the people that are their core base happy. So it's a tough position that they're in. I think that if they're going to do the right thing, they're going to have to take some licks from their base, and they're going to have to support us more.
Yep.
I don't know, after Tuesday, are they going to really care? I mean, because there's nothing else that can be done to them, because I think it's going to be a pretty strong performance for the Republicans on Tuesday. But, we'll see what happens. I'm hopeful that they're going to come around and really try to help people, because ultimately right now, I mean, these high prices and, the high prices of energy denominates the cost of everything,
Yep.
Food, housing, clothing, everything you buy every day has a huge component of it that comes from energy. And so this is probably the biggest contributor to inflation is energy costs.
Yep.
So the people that are hurt the most by it are the people that they say that they care the most about, which are, low and middle income people. And so if they truly do care about those people, I'm hopeful that they'll do the right thing.
Yep.
But I'm not confident that they will.
Yep. How much is, in your opinion, oil prices were already rising pretty quickly. I can't remember where they were at when Russia invaded Ukraine. I think Russia Ukraine has an impact on the energy markets. But now, 8 months later, is it a big, like if Russia Ukraine ended tomorrow, would prices settle down a bunch, or has the market kind of normalized itself around the Russia Ukraine issue?
Well, that war has certainly increased prices. There's no doubt about that. But the problem was building long before that, just because of what I said, because of the underinvestment. Now, if they come to a resolution tomorrow and the war ends, I don't know that longer term there is going to be a huge difference, because now we can't really trust the Russian supply anymore because we don't know what they're going to do. So, people, there's always going to be that geopolitical kind of premium in the price because of the risk that's there. And so I think this is going to be a persisting problem and it always has been in oil markets, that political instability, it keeps prices high. And I think it's heightened even more. And I mean, there's all this saber rattling between Saudi Arabia and Iran right now that could blow up any moment. And so again, it just goes back to, we need as much production in this country as possible from a national security standpoint, from an economic standpoint, for every reason, from an environmental standpoint. We need more energy here, and we need to support domestic producers and make sure that they're getting everything they need to produce here. It's the only thing that makes sense. And that's why, through the ESG movement, through the divestment movement and everything else, the ones that have been hurt the most have been domestic producers. It's held us back the most, and that's what's crazy about it. I mean, ESG doesn't affect Rosneft or Saudi Aramco, right?
Right.
I mean, they're doing whatever they want to do. It hurts, Pioneer. It hurts Exxon. It hurts, people who are doing stuff here that we need to be supporting.
Yep. Let's talk a little bit just about kind of labor and the next generation getting into this industry. So it's one thing to say tomorrow that, everybody now aligns that we need to produce domestically, but there's been a constant degradation of kids in college, people growing up aspiring to be in the industry. And that's also coming at us pretty quickly, not just in the oil field, but in geology, exploration, across all industry. Kids aren't growing up anymore saying this is an industry I want to be in. What do you think? Like, what are your feelings there?
Yeah, it's a big problem. Like at Texas Tech, we've seen something like an 80% decrease in the number of kids that are doing petroleum engineering now. Engineering department numbers are still, a lot of kids want to be engineers, are just not choosing petroleum. So it's a problem. So I think there are a couple things to it. I think number one, we need them to better understand that there are really good long-term career opportunities in the industry. Kids that are getting a petroleum engineering degree or a land management degree or whatever it is, come out getting a job and making good money. There's opportunity there. So, it's not going away. It's going to be here for a long time. We got to get them to understand that. The second thing we got to get them to understand, though, is that there is a valuable purpose in entering the industry. Like kids, everybody, but especially people today, want to think that the work they're doing is helping the world, is benefiting society, that they're doing something that's meaningful and good. And I think the perception is that, and a lot of people is that the oil industry is evil, like we're hurting the environment, we're destroying the world, all these things. But really what they need to know is that we're helping the entire world come out of poverty. We are keeping costs down. We are making lives better around the world because people really do need this product, and there's not a solution for it right now. There's not a substitute. And so I think if they understand those things, that they can make money and they can do good in this industry and have a positive benefit on society through being in the industry, I think more people get into it. But that's not something that can be done easily. And I think that it's gone so far, and there's such a gap right now in the workforce that, again, I think we're going to have to feel a lot of pain before the problem is solved. But manpower right now is a huge issue in our industry.
The best marketing I've seen in the industry has been in the last 3 or 4 months with public company CEOs writing letters to the White House and publicly posting them. Basically just being very candid and honest and not shying away from the topic. But the question's really, why is there not, why at NAPE or when y'all all get together at these conferences is somebody not saying, let's all chip in a couple, everybody chip in a few million or whatever, the big boys chip in more, and let's have a marketing.
No, we are doing it. We're doing everything we can, and people are speaking out. There's some great voices in the industry right now that, like a lot of the public company CEOs are doing a great job. There are other private individuals doing a great job. It's just nobody wants to amplify it. Nobody wants to hear it because it doesn't fit with this narrative, this political narrative.
Yeah.
And I don't want to be the one that's like, the media is doing this to us or that to us, but there truly is selection in what gets actually talked about.
Right.
And instead of talking about the reality of the world and the energy system and people just think, well, they take it for granted. I turn the light on, it comes on. They don't realize how much goes into that. And so we got to somehow have people talk about it more and hear, and it has to be publicized on a broader scale. And the mainstream media has to pick it up and start communicating with people and telling the truth. Like I said, the Wall Street Journal had a great piece this last week. I think they're doing a good job, and they're telling the true story, but it has to go deeper. It has to go wider. And, everybody has to be kind of understanding what the reality of the situation is.
You said something about poverty, alleviating out of poverty. And basically, I'm assuming what we're talking about also is not just, we've already seen what oil and gas has done for America, but when we're talking about other, Americans tend to just think about America. They're not thinking about the other 6.5 billion people on the globe. 3 or 4 billion of them have still never driven a car yet. So when we're talking about oil and gas, it's not just for America, it's for the whole globe. And maybe just go a little bit further on like what that does for this huge part of the world and how them succeeding lifts all boats.
Yeah, there's still over 1 billion people in the world that don't have electricity, don't have refrigeration, don't have very basic things. They don't use plastics, and we take all those things for granted in this country, and we don't see the side of the world, even when we travel, when we go to Europe or we go to these nice places like, oh, everything's great everywhere. No, it's pretty bad in a lot of places. And those people want to drive cars. They want to have air conditioning. They want to have all the nice things that we have, and they should. And we can deliver that to them. But they can't afford to acquire it through using renewable systems. It's just too expensive and too difficult. So it's going to require hydrocarbons to lift those people out of poverty. And, that's the greatest thing that we've done in the world, the energy industry has done, is it's lifted billions and billions of people out of poverty. And the more energy that's available, the less poor people are. And so, that is the great global social purpose that we have in our industry, is helping people around the world who don't live as long, whose lives are terrible, that have to, go and daily, go and pull water and bring it back to the house and all, so many things that we take for granted, people just don't have. And we need to be aware of that and think about that as we enact our own policies, because if we starve the global system of energy, which we're doing right now, we are going to hurt billions of people. We are going to kill millions of people. And, I think that's something that we just don't take into account. We talk about, that we catastrophize these global warming scenarios. And we say all these people are going to die from, these different weather events that are going to occur, or whatever, famines or heat waves and all this stuff. But the reality is, if people don't have energy, a lot of people are going to die.
Yep.
And weather-related deaths have actually decreased significantly over the past 100 years because we have air conditioning, we have heating, we have nice homes that can withstand storms and those kinds of things. Well, they don't have that in the rest of the world. And so if we don't provide that to them, they're going to continue to die from very, basic things. And so before we start getting too carried away with, being privileged and taking our life for granted, we need to think about the fact that people around the world don't have the things that we have, and we need to find ways to get it to them. And right now, technologically and economically, the only way we can deliver those things to people is through use of hydrocarbons.
And I haven't honestly seen much on it. I've seen a little bit here and there. I saw some earlier on in the year, a few countries where the oil and gas was kind of getting choked off and people were rioting pretty quickly. But do you have any knowledge of what is going on in some of these parts of the world right now as prices are getting higher? Anything that comes to mind?
Yeah, I mean, look at what's happening in the UK right now. Look what's happening in Spain. I mean, they're rationing energy. They're not going to be they're going to be cold this winter. They're not going to be allowed to keep their homes and their businesses over a certain temperature. It's destroying their industry. Small businesses are being destroyed in Western Europe right now. They just can't afford to pay the electric bill.
Mm-hmm.
And those are developed countries where things are pretty good. And so, it's hard to get specific reports on what's happening in the third world, but it's got to be even worse because they can less afford more expensive energy than
right.
Western Europe can. And so it's bad. And I, don't have statistics or anything, but I can promise you that people are dying as a result of it.
Yep.
And this winter, it's going to be even worse if they can't afford their electric bill. Food is going to be an issue. Fertilizer is already an issue in Europe because they don't have the gas to manufacture the fertilizer that they need. And so crop yields are going to be down. Food cost is going to be higher. So it's a bad situation. And we got to get sober pretty fast before a lot of people get hurt.
Well, I'm trying to keep it on a let's get sober track by asking the tougher questions. Even if we said today, just flipped a switch and said, all right, we're all pro oil and gas, just speak to what it actually takes to come back online. Because a lot of people sometimes assume, okay, we drill a well, we have a barrel of oil tomorrow. But just as a nation, maybe as a globe, to really rally back to a pro fossil fuels, pro hydrocarbon world, are we talking years, 5 years, 10 years to right the ship and get everything kind of back to working again?
Yeah, it's going to take a while because the underinvestment has taken a while. And like these big mega projects, international projects, take years and years to explore and find and develop. So, and that's not really my area of expertise, but I know those things can take up to a decade. Even here in this country, where we're always known as a swing producer, we can bring production online pretty quickly. We have serious bottlenecks on the service side. There just aren't enough people and machines right now because a lot of them left the industry and weren't maintained, all those kinds of things. And so we just don't have the infrastructure right now. So there's got to be reinvestment of that. But even if we were to start drilling a pad today, that thing may not come on for 7 or 8 months.
Yeah.
And so it takes a really long time for that production to come on. And so, again, I'm afraid that it's too late. It's too late to avoid some of the worst effects that are going to happen. And I hope I'm wrong, but I think that there is going to be a major crunch coming up. And, this winter, I think Europe has decent gas storage available. Next winter could be really bad. They just flat out run out of gas. And that's a disaster. And so, we're going to have to get pretty creative and pretty aggressive to find ways to solve that problem.
For Europe, and so I'm just assuming, again, I know you're not a Europe expert, but they're going to blow through their gas this year. Mm-hmm. But then you could say, okay, but they have all next year to restore it.
Well, but they don't have the Russian supply. And that's what they were totally relying on. So if that Russian supply isn't there, it has to come from LNG. They don't have enough LNG import facilities to fill their storage. So what are they going to do?
So and again, now I'm not making you a war expert, but is the ideal situation for the Russian war to stop, but somehow in that get Russia to keep supplying gas to Europe in some type of agreement?
Yeah, maybe. I'm not sure what the solution is there, but ultimately they cannot be reliant on that supply.
Yeah.
They can't do that to themselves because they're so vulnerable if they do.
Yep. Okay, let's get back to the Permian for a little bit. I read something the other day, in 2025, 2026, we're going to start running out of tier 1 acreage and we're going to move into tier 2, tier 3 acreage. First question, just what are the different tiers? What do they mean?
The tiers are typically based on the return that you get on the investment from drilling a well. Okay. So the highest return wells are tier 1 and it goes down by tier. I do think that a lot of companies are running out of their best locations. There's a finite number of them. And so you're going to see, the production return on each dollar invested decrease over time. So that makes the problem even more of a problem, right? Really what we need is more investment in technology and exploration in this country because there hasn't been a new shale play discovered in quite a while. So that has to happen. But investors, again, don't want companies investing in these projects that are years out that may or may not work out. They want them paying dividends. They want them, to make the next quarter. So that attitude has to change, and I don't see it really changing. So you're probably going to continue to see diminishing return, per rig returns from a production standpoint in the Permian and elsewhere. And that again just makes the treadmill harder to stay on because the base production, the existing production, the wells that have been drilled continue to decline, and it's harder and harder to keep that production up as the newer and newer wells become less and less productive.
Back to what you just said about paying the dividends, and this was something that I think Exxon's CEO talked about this week or last week. But he said something along the lines of, "You guys asked us to pay our free cash flow as dividends to investors, so we're putting money in the American people's pocket." But it's kind of a double whammy because while that sounds good, it also means that money's not going into exploration.
Right.
Is there going to be any? Hey, maybe we pay a smaller dividend, keep more to explore, or is it just for now?
Well, that's what should be happening because just from a corporate finance standpoint, they can still make tremendous returns, greater than 50% rates of return on the wells they're drilling. So, we learned in school and business school, like you got to make that investment. You don't pay a dividend as long as you have that kind of opportunity to invest at those high rates of return, but that's not what investors want right now.
Yeah.
And so it's just, that is not really changing. It hasn't changed yet. maybe we'll start to see a little bit of a shift, but it's going to take some people stepping out there and saying, look, we know what you want. We're not going to do it. Their stock price is going to take a big hit. They're going to have to go through some pain. But it'll be the more highly regarded companies that can do it first. We've seen EOG, which is a great company, do it a little bit. They were the first ones to say we're going to start growing again at a higher rate. And so I think you're going to start to see more and more companies do that, but they're going to have a near-term hit to their stock when they do it. If they say we're going to decrease dividend and put more in the ground, investors are going to sell their stock.
Okay, and just give a little bit of, I think you just said 50% returns, but for folks that don't know the basic math, oil's at $92 today. What does that look like financially to the person drilling a well? Assuming, tier 1 acreage in a Permian, you drill a good well, what's the rate of return at $92?
Well, it depends on the cost of the well being drilled. And our costs have gone up, tremendously over the last, because of supply chain issues, because of the cost of commodities that we use, the cost of labor, everything has gotten way more expensive. And so really the returns we're getting at $90 are not that much different than they were at, $50 or $60 because the cost is higher. So it's the return on the invested dollar that we're looking at. But, there are areas in the tier 1 where you're still well over 100% rates of return IRR. I don't know where else you can get that. And so we should be putting as much money into that as possible. But even in the, the lower tiered acreage, it's still over 50%. And those are great returns. And, that compounds pretty fast.
And in a shale play, 100% IRR, like you said, it's manufacturing. It's not like you're drilling a well hoping to hit oil. It's like, nope, it's there. We're getting this 100%.
Yeah, and there's variability from well to well, but if you drill enough of them, almost exactly in a group of 50 wells what the average production is going to be.
Right.
So it's very predictable. It's not risky. There is some operational risk, but even that's been reduced because we've just drilled so many of them now we know how to do it. So, it's outside of commodity price fluctuations, it is as close to a guaranteed return as you can get.
And I know that you said we haven't found any new shale plays, and I asked you this 2 years ago. Is there any technology, better fracking, better anything on the horizon that is looking positive to get more oil out per dollar spent?
Everything right now is pretty incremental. It's like small improvements and efficiencies, and those are great. And we find those all the time. Every company's working on that. We share a lot of ideas together. The industry is very good at cooperating with each other. And so everybody's doing pretty close to the same thing now. There are some new zones people are looking at, even in the Permian, that look like they're going to work pretty well. And I think longer term, like we have in a lot of reservoirs, there are going to be enhanced oil recovery, maybe CO2 flooding, maybe water flooding. You might see some refracking going on out there where people go and refrack an old well. I think that'll be kind of the next stage of development. And so a lot more oil will continue to come out, but those technologies are still kind of nascent. And again, people aren't wanting to invest money in those projects because they're just under so much pressure to pay the dividends and not spend money. And so, I do think we're going to see more of that over time, and people are talking about it. So I'm encouraged by that.
If you, the old Klein shale, something that everybody went all in on, put a lot of money out, and then it went away pretty quickly. Did it go away because there was no oil, or because it was too expensive, or both?
Well, it didn't work very well.
Why?
Well, just geologically, it just didn't work. I mean, the wells would come in really big and they fell off really fast, and so it didn't work. But there are some areas where it is working now, and people are drilling it. We now call it the Wolfcamp D instead of calling it Klein.
That's better.
We've rebranded it. So, but further deeper in the basin, a lot of the Klein shale was kind of on the east side of the basin. They call it the Eastern Shelf. That was where the play kind of took off. Further down into the basin, we're starting to see a lot of great Wolfcamp D results. And so I'm optimistic that we might be able to push it a little further east and have some success in that. So that could be one. People are talking about the deeper gas zones in the basin now, so that there could be some things there, some uphole zones as well. But the Permian is the gift that keeps on giving. People have always said, old guys, the best place to find oil is where the oil is. So, in these old fields, there's just a lot of hydrocarbons in that system. And so I think that there are going to continue to be things that are discovered out there.
Yeah, and I asked about the Klein just because I'm assuming there's probably lots of shales like that got abandoned that might have a chance.
Yeah, there's no doubt. And there are those in other basins too.
Yeah.
I'm not as familiar with the other basins, but it's just a matter of spending the time and money on it. It's hard to figure out.
Yep.
I mean, you got to, the first wells that you drill in those plays cost, $25 million or whatever, and they may or may not work. And then one might work, but then the next one might, might not. It's just, you never know. And so it's hard. The big boys are the ones that have to do it. And right now, the big boys are under so much pressure, they just don't want to spend the money.
All right. I didn't have this question here. I know you're not a geologist, but I'm assuming you know the answer to this. Why did the Permian Basin end up being the place where all the oil settled?
Well, it was a shallow sea a long time ago.
Okay.
And I guess a bunch of dinosaurs died right there.
Okay.
And they became oil. No, I mean.
So even the dinosaurs love Texas.
Yeah. No, everything flowed into that little shallow sea there. It was just teeming with life and plant life and animal life and microbial life and, all this, this rich material developed that had a lot of organic material in it. And it just made oil. And so that was basically everything just accumulated right there a long time ago.
And the dumbest question of all time, we can't man-make oil.
I think you actually can.
Okay.
But it's just not very efficient.
And not at scale.
Yeah.
All right. We're going to move on to NCAA. But before, we've talked about just kind of pain, and we don't want the pain to come, but it might be the solution to rechanging how we think about oil. We're running low on strategic reserves. We could make some arguments. There's been some political stunts to keep oil prices low. If you had to make a prediction of where that will peak in 2023, do you have a number?
Well, it's a very complicated calculus that goes into coming up with that. Part of it is supply side, which I'm very bullish on. The part I don't know about is what the economy is going to do, because the macroeconomic picture affects demand significantly. And so if we see a deep recession, which I think there's a high likelihood of, that could abate prices quite a bit. But if like China comes back online, which oil is up today because, China is opening back up and picking up activity again. If you see that, then oil prices could be supported. But I think even in the downturn case, I think oil prices are still going to be pretty high just because of the supply side. So it just depends on how deep the recession goes.
Yep. Fair enough. All right. We talked about oil. One of the things that I think has been really cool and something you've written on, you've kind of been at the forefront on, is the NCAA adopting the NIL rules. Mm-hmm. So basic question, what is the NIL? What happened? And then we'll talk about how you feel about it and such.
So last summer in July, there was kind of a cascade of events that occurred. There were some court cases, some state law changed, and essentially it became legal for individuals and businesses to pay college athletes for use of their name, image, and likeness. And the original idea is that you're going to be able to pay a kid to go sign memorabilia. You're going to pay him if you have a car dealership. You can pay him to be on a commercial or a restaurant or whatever. And so kids can capitalize on the value of their brand, which is great. And so it's sort of, when that happened, it happened on a legislative level and on a judicial level, and there was no really regulation of it. So for the past year and a half, it's been the complete wild, wild west. It seems like there are no rules, or there are some, but the NCAA hasn't been aggressive in enforcing those. And so people are just doing all kinds of crazy stuff, paying players millions of dollars. I think in many cases it's been very destructive. So there are two basic sources of NIL. The first is what I talked about, where it's just the pure commercial, the true NIL. And then there's the other side, which is these collectives. And what collectives are is groups of boosters, alumni that get together and pool their money and then go pay players with that money. And so a lot of those have been formed. Most schools, most Power 5 programs have a collective now. And we formed one at Texas Tech, going on a year ago now, called the Matador Club, with the idea being that we want to do this in a responsible way. Being a former player, I know that football is not an individual sport. And I saw a lot of programs chasing these individual recruits, paying them a whole bunch of money. They never played it down. They're just one guy. You get a great quarterback, but if you don't have a good offensive line, he's not going to be very effective. So what we wanted to do is build a system that, first of all, follows the rules. It does things the right way. That doesn't hurt the kids more than it helps them, because I don't think that giving a high school kid a couple $100,000 is going to make his life better. It might actually make it worse.
Yep.
But then next, we want something that's going to build the whole team. And so we got money raised, and Texas Tech is extremely passionate. We're going to see that tomorrow, hopefully, at Amon Carter Stadium. We have a huge alumni base, more than 300,000 people, and they're relatively affluent. And so, we've had a pretty strong ability to raise money. So we raised a pool of capital, and the first contracts we did were with the football team. We signed 105 players. So it was the 85 or so scholarship kids plus 20 walk-ons. And we pay them each $25,000 a year. So the star quarterback doesn't make any more than the true freshman offensive lineman who's redshirted. The goal there being that over time, that's going to build the team. It's going to keep kids happy, keep them around. It's going to make them feel supported. It's going to keep them comfortable. A lot of these kids come from pretty bad backgrounds. They don't have a lot of family support. They need that money. And so we think this is really going to help them. And over time, it's going to build our program. We've seen a much more solid locker room this year at Texas Tech than you've seen in a lot of places that have done it different ways. So far, so good. I think it's working well. And I hope that we can be an example of the right things to do. Like I said, we're following all the rules. We're the exchange of values. These kids, in exchange for the money that they're receiving, they're doing charity work in the community, which is great for the community. It's really helped raise awareness of a lot of lesser known charities in the Lubbock area. It's connected the kids with the community. It's gotten people to know them. It's been fantastic in that regard. We're not inducing recruits. We're not talking to kids before they get on campus. We'll sign you once you're there, but we're not going to, we're signing. Now, I think a lot of recruits know that Tech has a strong NIL program, and so it's probably going to indirectly help our recruiting, but we're doing things the right way, and we're being very careful about that. We're doing all the reporting properly. We're following all the rules. And so, I think things are going well out there, and I'm excited about it. I'm excited about our coach, Joey McGuire. He's a great guy. I'm excited about, we have a new $200 million facilities project for football that we've undertaken. And I think things are on their way up at Tech.
When you say solid locker room, are you referring to not having a team where you got the 3 or 4 studs that got paid millions of dollars and it kind of spoils the whole culture because you have these super chickens and then everybody else that's not kind of being maintained at the same level?
Yeah, I mean, all right, you're a senior or junior receiver, you've worked your tail off, you're a very productive player. You're not getting anything, but this kid who's never played a down just got $1 million.
Yeah.
Where's my money?
Yeah.
And so that just creates dissension and frustration, and it doesn't help your team. And again, football is a team sport, right?
Well, at Tech, can any players get paid above and beyond what Matador gives them?
Sure. The Matador Club contracts are non-exclusive. So they get the money from Matador, which is like their base salary. And then they can go out and get a deal in the community. And we have another group that's helping them get those deals. And they're getting a lot of them because Lubbock's a fairly big market for a college town. Tech is the biggest thing going on there. So the businesses are really support and step up and want the players to be on their commercials, want them to do social media for them. And so there are a lot of opportunities for those kids out there. And, so they're doing well there. And so they're getting their money, and that's fine. That's commercial. It's a business, making a business decision to pay these kids. That's fantastic. And it puts more money in their pocket. But overall, we have a very solid group of kids that are happy. And, and so I think it's working pretty well.
Okay. The kids get the 25 grand. Obviously, that's a huge help. Is there anything that Matador Club or Tech's doing or y'all are doing to give these kids also more life skills like financial literacy and things that they can take with them back out into the real world?
Yeah, that's been a big concern with all this because, when they make this money, it's taxable. So, at a very basic level, they need to know how to file a tax return. And so, immediately when we signed the contracts with them, we told them that. We said, look, you guys need to set aside money because you're going to have to pay taxes. But beyond that, we have a financial literacy program that is a part of all this that explains to them the long-term value of actually keeping that money, saving and investing it and those things. And so if you hold back whatever amount you hold back, you're going to have this much at the end of your college career, which a lot of them don't understand. So don't go spend it on, cars and shoes and all that kind of stuff. Be wise with it because your expenses are actually pretty low. So you can hold back a lot of money and do a lot of things. But I think that aspect of it is actually a pretty big side benefit to this. Now, not many kids, athletes or not, come out of college knowing how to file a tax return, having any idea what to do with money. And so these kids are now going to have the opportunity to learn those lessons and hopefully grow up. And so, transition into the real world will be a little bit easier. So I feel pretty good about that part of it. I think we're going to have some bad stories despite whatever we tell them or teach them. Some people are not going to make the right choices, but they're kids. But we're doing the best we can to make sure that they at least understand what they need to do and what they should be doing. And I think that again, that's going to be a pretty good side benefit of this whole NIL thing.
I know you said we're in the Wild West. When we talk about A&M, who has a alumni base and total funds available, that's, God knows how much.
Yeah.
Is part of the Wild West figuring out how you don't get these 15 to 20 power schools that have all the money and eventually kind of create their own league, similar to what like Live Golf has done in the golf world?
Yeah, and Liv's blowing up, right? It's not doing great, but I think that it's going to be interesting. I think that could happen, but I think it's going to happen in ways that people might not expect, because a lot of the perennial powerhouse programs don't have the wealth in their alumni base or the size of alumni base that some of the, next tier do. Like Alabama has been pretty outspoken against this stuff because they just can't compete with Texas A&M when it comes to NIL. Alabama's a relatively poor state. They have not had a long history of giving in their program. They only have a handful of $1 million plus donations. Texas Tech actually has more capacity on the NIL side than Alabama does, which is interesting. So I think it could reshuffle the deck, and it will reshuffle the deck quite a bit. Some schools are going to rise up that can do it, and others that can are going to have a little more struggle. But places like A&M, as long as they do it the right way, could really benefit from it. Now, I think they probably did it the wrong way at the front end because they paid a bunch of recruits a bunch of money, and now they're having issues within their team and in their locker room. And so they have to get a little more organized and disciplined about it. But it's not my business. I'm not trying to tell the Aggies how to do things, but I would say that people just need to be careful. People need to be careful with how they implement it and how they do it. But more than anything, just make sure they're not hurting the kids more than they're helping them.
Well, and that's something that when you wrote, I think your first piece was, how do we keep kids getting the best all around experience? Because 0.5% of them are going to go pro. 99.5% of them have to enter society again and live a life that's not going to be paid, all this pro money.
Yeah. I mean, they're 18 years old. They're kids. And not many of them go pro. So they need to be focused on getting their education. That's the number one thing. They don't need to be transferring all over the place and never getting a degree, never making friends, never making contacts. But more than anything, they got to grow up. They got to become productive members of society, good people. I know from my own personal experience, college football was great for me. I developed a lot of work ethic, toughness, mental toughness, physical toughness that carries me through to this day in my family life and my business life and all aspects. And so I want people to continue to have that experience that an amateur athlete has. And we've got to find ways to preserve that while also resolving some of the economic unfairness that's taken place, because schools and coaches making $10 million a year, all that kind of stuff. It's not fair, right? Because kids get a scholarship and that's great, but it's a definable value on that scholarship. At Tech, it's like $25,000 a year. Well, that's not really equitable whenever you're talking about a coach that's making millions. Multiple coaches on the staff making millions. And so we have to rectify that unfairness while also making sure that the kids still receive the tremendous benefit that they get from participating in college athletics. And we're not just talking about a few kids. It's thousands and thousands of kids every year benefit from it. And a lot of them are the first in their family to go to college. A lot of them, it's an opportunity for social mobility. And we need to preserve that. And I right now I'm concerned about the direction it's going, but I do think people see the same thing I see, and we're going to get it right. But it may take a couple of years.
And is this being talked about just softly amongst universities? Are there boards now that have formed to kind of create policy? Like, who's actually making the decisions for this?
Well, right now, nobody. I mean, their state level legislation has happened, but it's, each state has a different law, and it's, they're in conflict with one another in many cases. There's discussion on the federal level, and a lot of bills have been filed. None of them are comprehensive. A lot of them I don't think are very thoughtful or have good understanding of what's really going on. So I think after the election, there are going to be more and more conversations about this. And, hopefully there's some hearings and some real thought put into it. But it's a complicated issue. You're dealing with Title IX. You're dealing with antitrust law. You're dealing with all kinds of things that are not real easy to solve. And so we have to find a way to get it right, and in a context that it actually functions and works legally, but also practically.
Yep. All right. We were chatting the other night. You have built and sold 3 businesses. You're involved in several others. You've become one of the preeminent leaders at Texas Tech, and have started to just emerge as a figure that's helping a lot of people out. What is it that continues to motivate you? You're still relatively young and have a lot of room to go. So what's driving the engine?
Man, I think that it goes back to what I was talking about with the, why people aren't entering the industry. Ultimately, when we think about working, we think about money, and you go to work to make money every day. But really, money is just kind of a short-term thing. What you really need is purpose. Like you need to have a reason for doing what you're doing. And you get to a point where you have enough money and you that comes into focus even more.
Yep.
In order to stay motivated, you have to have a reason for doing what you're doing. And for me, I feel like I'm actually doing a lot of good. I talked about the good that the oil and gas industry does for the world. But, I strongly believe that the greatest tool that we have ever invented is free market capitalism when it comes to helping people improve the quality of their lives, bringing people out of poverty. And that's been empirically proven over the last couple hundred years. We've shown that capitalism and free markets are very, very important. And so in order for free markets to function, you have to have entrepreneurs that are willing to go out and take risk and do things and build businesses. And, that's John and I are good at that, right? And so we have a real talent and real ability. And so I feel the moral obligation to continue to engage in commerce because the deals that I do with other companies, with our own people, it helps them and it makes their lives better.
Mm-hmm.
And so, that's the biggest motivator for me at this point is just that I have this ability and now I have a lot of experience and know-how. And so I need to go out and use it. If I didn't, I'd be a real piece of crap. And, you and I probably grew up with people, I know I did, who, might not have graduated from high school. They're lazy. They sit around, they never do anything. And people are like, oh, that guy's trash. That guy's a piece of crap. He just sits around and doesn't do anything. But a person who makes a bunch of money and then goes sits on a beach, you don't think anything about that guy. You're like, yeah, good for him. He's sitting on a beach. Well, I kind of think about it the other way. If I were to just go sit on a beach, I would be a way bigger piece of crap because I actually have a lot of ability to help a lot of people, a lot more than that other guy. Because I have God-given ability. I have, experience now. I have resources. I have ability to raise capital. And so, I can do a lot and help a lot of people. And so, like I said, feel very strongly morally obligated to go out and do something with that, engage in commerce, do deals, build businesses. And so that's what I'm going to continue to do as long as I feel like that is my highest and best use. And right now, that's certainly the case.
Yep. Cody, man, I really appreciate you coming for round 2.